Hello, and welcome to the FlowRy Show, a journey through life's tapestry, wisdom for every generation. On this show, we talk about where generations intertwine, sharing stories and dreams. Whether you are a seasoned sage or a curious young mind, we are all students in the grand classroom of life. Join me today, Nicole Flowers, and unfortunately, I do not have my co-host, Mike Ryan, but here in the studio with me today is a very special guest where we'll talk about exploring tapestry woven with threads of collaboration, dreams, and lessons learned along the way. As I shared with you, today I have a special guest in the studio, and his name is Dr. Yasir Samra. He, Here he's going to share with us some insightful conversations on options trading. We're going to look at how do we go about bridging the gap in options trading across generations. And let me just give you a bit more background on Dr. Samra. He's a seasoned options trader with more than 2 decades of experience navigating various market cycles. He has seen it all in a nutshell. His unique perspective bridges traditional trading approaches with modern techniques. In addition to his online trading savviness, he's also a professor in management and marketing department at Manhattan University. And he has his PhD from Stevens Institute of Technology. Dr. Samra, welcome to the FlowRy Show.
Oh, welcome, welcome. Thank you so much. I'm honored to be here. And my goodness, I need an introduction like that to my family. Maybe they'll admire me a little bit more and get a little bit more respect at my house. So thank you so much. It's great to be here. And I'm certainly looking forward to all your questions that you have for me today. And hopefully people will get something out of what I will speak about today about bridging the gap regarding wealth, the generational gap for about wealth. I'll give you a little bit more background about myself. My parents are immigrants, and my parents came here, I want to say in the late 60s, early 70s, and they just came here just to pretty much put my sister and myself through college. And wealth generation and the accumulation of wealth is something that's very important. It's a very dear subject to me, especially because I've seen my parents work so hard and take these kinds of risks to leave the comfort of their own homes to some place brand new where they barely spoke the language and managed to make it. So yeah, with that, I'll let you ask away any questions that you may have, and hopefully I'll be able to help you and your listeners.
Absolutely. We believe that just given your insights and wealth of knowledge across options trading, that our listeners will find it very beneficial. So let's just dig in. And I want to define some terminologies for folks and through the lens of option trading. So when we talk about baby boomers, we're talking about folks who were born between the 1940s and the 1960s. Most of them are retired today. And based on my observations, they typically have a fundamentals focus with longer holding periods, right? Oftentimes prioritizing income strategies like cover calls and cash secured puts, as you will be explaining in a few moments. And then we have that next generation, the Gen X. Which is probably around our generation, right? Where we have experienced both the pre-internet and the digital trading eras, right? Oftentimes we look at a blend fundamental analysis and technical approach of how we go about looking at trades, etc. And then you have the millennials. My niece Najee, she's a millennial. They were born in from the early 80s into the mid 90s. And these individuals, they are what we consider the digital natives. They're very comfortable with algorithms, and mobile trading, and more likely to incorporate social sentiment analysis in terms of what companies they feel good about or how they're looking at certain assets class. And then Gen Z. Gen Alpha is not quite doing trades, but we're certainly helping to prepare them, right? Hence the reason for this podcast, talking about how we build wealth across generations. Gen Z were born after the late 1990s, and they tend to be more of a high frequency traders, focus on momentum and volatility. They have a much higher risk tolerance, if you will. So, Dr. Samra, help us think through when we look at options trading and how it has evolved across different generations. What key differences do you see in the approach, the strategy, when we look at it from a generational perspective? And you can cite examples in your own personal experiences.
You know, it's funny. I spoke with a baby boomer maybe about a year or so ago who had her career on Wall Street before retiring after spending 20 years at one of the big bank holding companies. And she just became a real estate agent. Just that was her retirement job. She didn't want to fully retire. She still wanted to work. She still wanted to interact with people. And she took this job as a real estate agent. And she said, you know, Yasir, I don't want to be involved in Wall Street with these options. When these options really started coming about, that's when she kind of backed off. And I said, why? Options are so beautiful to trade because, especially with all the data now, you can make such an informed decision based on all the numbers that are there, and anyone and everyone can learn math, right? So you don't necessarily, my background is in engineering. I'm pretty proud of the fact that I did chemical engineering for my undergrad. I barely got through it. It was a very difficult degree, and I wasn't the greatest student for my undergrad, but nonetheless, I learned the math. And I remember I had one professor of mine said, he told us, God rest his soul, he told us, he had asked us the first day of class in my kinetics and reactor design course. I don't remember anything from the course, but except the title. And he said, he said, why are you studying chemical engineering? And everybody gave him these lofty ideals. You know, my background, like I said, my parents were from Egypt, and I speak Arabic. So I wanted to go back to the Middle East and work for a petrochemical firm or what have you. That was my reason. And he told me I was wrong. And everybody else gave their own reason. And he also told them that they were wrong. And he said, the reason why you're studying chemical engineering is because you need to put food on the table. And he was, he was absolutely right. I probably worked 4 months with my chemical engineering degree, but I still use the critical thinking skills that I learned to problem solve. And when I'm trading options, I'm seeing just a wealth of information that you can almost feel like you're going to be bombarded with all this information. And going back to the real estate agent who retired from Wall Street, she just looked at it and she said, wait, that's way too much information. That's information overload for me. I can't deal with it. And I can respect that, right? And the baby boomers, and you mentioned that something about us being Gen X, we traded the markets when there were fractions, not decimals. All right. I don't know if you remember that, right? We traded the markets when we didn't have access to data. We would only look in the Wall Street Journal, and we would just look at ticker symbols, and they would give you the opening price, the closing price, the high and the low. That's it. There was nothing about options when we were growing up. And even in college, nothing. So looking at options, I use options. I still buy shares of whatever company or whatever index that I believe in. I'll buy them, but I'll also sell options. I'll sell calls against my shares as a hedge. And the beautiful thing about options is that if you're a seller of options, every time you enter into a selling position, a short position, if you will, on your options, your probability mathematically is greater than 50%. And we'll get into that a little bit later on if you'd like to look at detailed examples. But nonetheless, I, as an engineer, or you as a mathematician, or anybody who knows a little bit of math is going to probably, no pun intended, is going to go with the probability of not losing. They're going to err on the side of caution. And that's just how we are. We're biologically designed that way, right? We're biologically designed where I like to use this example. We like to eat berries, but the reason why we like to eat berries is because we are not going to go and hunt a gazelle, for example, right? We got to deal with lions. We got to deal with predators. And oh my goodness, that's way too risky. But if we hunt the gazelle, we could feed our family really, really well. But there's a huge risk, right? The risk is we can get killed. But if we just eat the berries, they're berries. You know, the risk is low, so too is the reward, right? And so the beautiful thing about options is you can kind of pinpoint what is your comfort zone, what's your comfort level when we're talking about probabilities. And without going into it too much, it's almost like when you're going to the casino and you're sitting on 17 at the blackjack table. Are you going to hit or are you going to stay put? You got to stay put because, 17 to 21, the probability of you busting or going over 21 on that next card is very, very high. So you don't do it. That's how I look at options trading. I look at it from a probabilistic decision-making perspective. I hope that answered your question.
Yeah, why don't we also touch on how you're observing millennials? How are they looking at options trading? I think I've heard in a conversation that you had that the millennials, they tend to leverage technology naturally, but sometimes they miss on the wisdom that comes with experiencing multiple market cycles, which you have seen. Yes. Can you just help our listeners understand for the millennials and Gen Z, how they can become better option traders and some of the key factors that'll be advantageous for them to consider?
So thank you for the question. Let me go back and state that I love my generation of Gen X. And again, it goes back to what you mentioned. We learned from baby boomers who did not have this technology, and we're still young enough where we're still employable, and we're maybe mid or senior career people, and we have to embrace this technology, right? So we had the wisdom from the older generation, and we have the technology from the new generation. And what I'm finding is that it's difficult. It's somewhat of a challenge for some. I have students that sometimes they will want to buy options, and I'm like, oh, okay. And during the pandemic, we saw so many people enter the options market thinking that they could beat the markets. It's not a problem. That's what they felt. However, lots and lots of these millennials who got into options trading during the pandemic a few years ago, they ended up losing. And I was like, oh, okay. I felt badly for some of my students who lost their money. And I told them, I said, chances are because you were buying options and it was not the right time to even consider buying options. Whenever I buy options, to be honest with you, I feel like, oh, I'm almost buying a lottery ticket and I'm hoping that the markets go my way. Because options have an expiration date, right? It's like when you get a coupon, right? The coupon would state at the bottom, there's an expiration date. You can't use this coupon after a certain date. Well, yeah, right. And so these millennials and people who, the generations that came after Gen X, they're having a harder time because they have so much information, but they're still young. They haven't experienced all the market cycles that we have seen, you and I, right? I remember, in the 1980s, what was I, a teenager maybe? And I saw the market crash, right? In the late 80s. Okay. And then fine. And then we saw after 9/11, we saw the dot-com burst, the bubble burst. And we saw the NASDAQ pretty much stay down for essentially a decade before it turned around. And people would sit there and they were, they were worried for a decade, more than a decade, while they're just sitting there waiting for their shares to come back up. In the meantime, people like myself, people were selling options. They were selling calls against their position all the way down. And they were just making, it was like collecting rent on a house. The house is not worth what you paid for it, but in the meantime, you can collect rents by renting it out and waiting for real estate to come back up. And that's the beauty of options trading. And that's what I try to teach my students, at least, is you generally want to be an option seller, hold a core position on something. I don't care. I don't care whatever company you like that you believe in, hold a core position of it, right? Company ABC is amazing for you. You love it. Don't buy it based on, public knowledge. Do your own analysis. Look at charts, do your own due diligence. Go out to the site. And I remember one time I was in a penny stock, and it was funny. There was this one person who posted on this one penny stock. He would go out to the small oil fields. It was an oil company, and he would just go out and just take pictures from the road, just to show us, hey, this is what's going on in this company. So there was no insider information. This was just somebody walking around, and I love that, right? And so here, what did I do? I bought shares, and of course, as soon as I buy shares of anything, it has to go down. But, right. And so it's funny, even when things go down, if there are option vehicles associated with it, you can still sell premium, right? You can still sell those options and target it expiring worthlessly, keep the whole premium, bank it, put it aside, and then do it again. And you know what? I will say something. I look at people who are at the beginning of their journeys, their trading journey. You will win, you will lose, but I always learn from my losses. So, when you're young, I always like to say you're usually young, naive, and stupid. Sorry. I know, because I was like
that. Not quite mature in their thinking.
You're just yeah. I'm like, oh my goodness, like young, naive, and gullible, right? So when it comes to trading, and you're looking at these options are a great way to hedge against your core position and collect or generate income, much like a dividend. We know that people buy some shares. I know people who purchase maybe $1 million of an energy company that pays a nice high dividend. And let's say if they purchase $1 million worth, they're probably going to get maybe, let's say hypothetically 5%. All right, 5%. 5% is nice. And if it's an energy company, they're probably going to stick with that dividend for a considerable amount of time. And they live off of that $50,000 every single year. Let's say they're single, they don't have any more kids, or whatever. They can live off of $50,000 a year. So they never have to touch the core position, and they just collect that dividend of $50,000 a year from whatever company that they're invested in. What I'm also stating is that, why don't you take a little bit more risk? And let's say you have shares of company XYZ at $50 a share. Well, by the end of the week, are you comfortable handing over those shares for, let's say, $55? And if the answer is yes, and the probability of it going from $50 to $55 is, let's say, 20%, are you comfortable taking an 80% likelihood that you're going to hold on to the shares, but you're also going to get a little extra kiss on the cheek, if you will, by the end of the week, in addition to your dividends that you're collecting every quarter? For me, I'm comfortable with that. Right.
And that's quite interesting. You talk about just not only your comfort level, but also your risk tolerance and defining that time horizon when you're willing to let it go, or do I now go through a much deeper analysis to determine, is this the right price that I want to lose my stocks, my shares. Now, I would like to transition a bit to talk about the technology revolution or evolution, if you will, in options trading. As you were speaking, I started thinking what life must have been like in the 70s when we look at floor trading era, right? This is where, and to your point, options wasn't even around during that time, but just the whole concept of the stock markets. And now coming in the 80s, where options were primarily traded through phone calls. You had to call someone who was known as a broker, right?
Yep.
And today, still using that expression, a broker.
Sure.
Executed on the trading floors. And I have a visual of a movie where they were on placards and they had to run from one machine over to the person who was behind the booth and approve that trade. And then the technologies have evolved over time, where it was no longer folks all around running around on a trading floor. We went to this online platform because now we have the internet, and the internet truly democratized access, where it significantly gave access to capital. And for early adopters, they could start looking at basic charting and how they go about executing. And then when the mobile revolution occurred, then now we're seeing trading occurring via mobile first platform to provide that user experience. And now today we're in this data and AI era. So share with us, how have changes in technology and market structure impacted options trading across generations? Every generation has now seen this evolution and the point in time how things were done.
Oh my goodness, what an amazing question. I'll try to address everything that you mentioned. So back in the day, you're right. You would have people who would have to walk from one side to the other. And I think it was IBKR, the founder of Interactive Brokers. He developed like a robot that would actually press the keys in order to speed up trades, right? Yeah, there's a video on it. Oh my God.
Whiteboard, they're writing things on a blackboard with chalk.
Yeah. And you're right. You had to get up on the phone and you had to call people. Yeah, see, that's a Generation X thing. We understand how a phone looks like, as opposed to, nobody uses regular phones anymore. We all use smartphones. So it's funny because, back then options did not have a bid and ask that was as tight as today, right? The bid might be $1 and the ask price might be $4 because there was no data coming in. This was kind of like, all right, this is what one person feels like. This is what another person feels like. It's not really calculated properly. It's the price of the option is not necessarily as accurate as it is today, right? Like now, my goodness, if you see the price of a stock go up or down by a penny, you will see that almost instantaneously reflected in the price of the option. So the information age has transformed options trading to the point where you have no excuse. The data are right there. It's almost like running a company. You're in an industry. You're in an industry that is growing, you're in an industry that is declining. It doesn't matter. The information is being presented to you. What are you going to do as a manager based on the information that is right there in front of you? The price action charts are there in front of you. The options are there in front of you. The Greeks that are associated with options trading, they're right there in front of you. You didn't have that in the 70s or 80s. I believe in 80s, that's when options trading really started to see its infancy. I don't know. I think I was in elementary school back then, so I couldn't really tell you exactly when options trading really took off. But my point is that we've gone from kind of making deals on the phone to now we're getting all these streams of data that are being presented to you as the trader. And I love trading with very few people. It's a lonely space, options trading. But my goodness, once you find your right niche of the right group of people that you trade options with, oh my goodness, those are going to be your new best friends, because they're going to start to understand what your risk tolerance is. They're going to start to understand, how greedy one could be. And sometimes I get greedy, and sometimes I get fearful.
Yeah.
And it's just nice because we see the information right now at our fingertips. So there's little excuse for missing a trade, backing out of a trade, or taking a trade. Your decision making is more quantitatively based, as opposed to in the past where it's like, I had to get in for this hedge, I had to sell this option, or I wanted to buy this option because I couldn't afford 100 shares, so I had to buy this option instead for a fraction of the cost of those shares. Now, of course, the risk is that option might expire worthlessly if you bought it, and then goodbye all your premium that you spent to buy it. But I really feel that the technology that is out there, it's still growing when it comes to options trading. And there's something that Nicole, that I've been working on. I've been working on a nice little project of mine just to look for yield. There was no such thing really in the 1980s on I need to find yield from my options. It was really kind of you're really guessing. But now I don't need to guess, because those probabilities are being fed to me live. I don't need to calculate anything when everything is right there at my fingertips. So yeah, of course there are certain things that I'd like to calculate for, like my weekly yield or my expected utility yield, things like that aren't in my screeners. And I use Thinkorswim. This is not an endorsement of Charles Schwab or anything like that. I just personally use them. I know many people who are using interactive brokers. They're happy with that as well. I know people who use Tastyworks or Tasty Trades, and they're absolutely happy with that. All three of those platforms will give you the same amount of information, and you can make a nice informed decision right then and there based on all that data. Now, going back to younger generations, look, as a college professor, I really believe that college is good for two things. I believe that it teaches you critical thinking skills, and it helps you express those critical thinking skills to solve problems. That's really what you get out of college. That's what I got out of college. I really did. Now, granted, and I don't know how much my poor parents paid for my college, and I was very blessed. I got a few scholarships as well, but thankfully my parents kept me debt free throughout my entire academic career in college, from my undergrad straight through my PhD program. But nonetheless, learning how to solve problems really helps me today when I'm looking at, I'll give you an example, buying a stock. Let's say I paid $15 for it. I kid you not. This stock I had a limit order of $15.55. The stock went to $15.54. It never went to 55 cents. And I'm like, well, my trade never got executed. Do you know how far that stock went down to, Nicole?
I guess way below you anticipated.
$1.38 at one point. Okay. For 1 penny, I wanted 1 cent more. And it collapsed. All right. This is kind of why I don't trade stocks in general. But we can get to that in a little bit. But nonetheless, what could I do? And I had a friend of mine from high school. He told me, he said, Yasir, why don't you sell options on it? And I said, yeah, you're right. And then I just started selling options, out of the money options. And back then they only had monthly options that expire. Now they have, in some cases, daily options expiration. So all I was doing was just selling options. And that's what I did in 2022. When the markets were going down, I did not want to hand over my shares, but I wanted to keep collecting something. And the data are being presented to me in real time. I can make my decisions a lot easier because, as you mentioned earlier on in the show, that I've experienced so many things. It's like I'll give you one anecdote. A friend of mine asked me, he said, Yasir, how do you do so well with your options trading? And I said, well, I was really blessed with a lot of losses, a lot of learning.
Which taught you a lot of learnings, right?
Absolutely. Absolutely. So this man, what a sweet man. He bought me lunch and and we were talking, we had tea over at his place afterwards, and we were talking about the markets and we were talking about decision making. So I like looking at options first from a decision-making perspective. I don't like to teach people how to trade options. That's not what I do. You can watch so many YouTube videos. There are so many books on the mechanics of it. But what I like to teach people is how do you get over your fear and how do you get over your greed? And you just look for, I guess, like if you're a baseball or softball player, how do you get those base hits in order to win the game? And I told him, or I asked him, I said, hey, aren't you a chess master? I think he was like a level 1000 out of 1500. Like if I played a game of chess against him, Nicole, I'd probably lose within 30 seconds. That's how good he is. But I told him, I said, don't you notice when your opponent makes certain moves, don't you know how to counter? And don't you know how to kind of maneuver in order to checkmate your opponent? And he said, yeah, I'm pretty good at that. I said, yeah, well, that's what I do with options trading. I said, it's just a matter of seeing, like you look at any successful athlete who plays on a team, they've seen so many things that they just look in the back of their mind. They're like, yeah, I've seen this before. I know how this is going to play out. Most likely it'll play out this way. And then they execute whatever strategy that has worked in the past, they execute it again. So it's really almost a matter of, it's almost unfair, right? The people who are older, right? It has like an inverse quadratic effect. If you're quote unquote too old and retired and don't want to learn how to trade options, some people who are, I'll get to that in a moment, but sometimes some people are just like, I don't want to learn it. I don't ever want to touch options whatsoever. And then you have some people who are much older than I am. They really want to learn how to trade options. And you know why, Nicole? It's really, really fascinating. It's because it keeps their brains sharp.
Yeah.
And I find that so hysterical because it's like, no, I'm going to utilize my wealth now that I'm retired to trade options. I used to trade options on oil, for example, and there were others who did as well. And it's fascinating because it's like, wait, we want to keep our minds sharp. So there's no age limit to trading options. Obviously you got to be an adult, but when you're young, you you're not a chess master, if you will. You're still so young that unless you're a prodigy, you're not going to get options trading. But you will if you, like a successful athlete or like the successful chess master who's experienced so much. They know, they get to a certain point in their game that they realize that, I'm very confident in my decision making. I know how I'm going to play this chess match out, and it's not surprising when they win. And that's what happens with options trading as well.
They now have those lived experiences. Dr. Samra, in closing, why don't you share with our listeners how you go about balancing risk and reward? I mean, I have read in a magazine at some point a couple weeks ago, quoted by yourself, the best traders I know, regardless of age, are those who maintain emotional equilibrium. They treat both wins and losses as data points rather than validations or failures. This perspective is the true mark of trading maturity.
Yes. Wow.
I've been following you. How do you balance risk? How do you balance risk and reward in your own trading? And what final advice would you give to traders of different ages before we close out today's segment?
Okay. So number one, let's look at balancing, right? So for example, I just have, I look at I first of all, I look at how much fear is in the markets, right? So for example, if they're, I know this is going to sound awful, but somebody had asked me, they said, "Oh my goodness, we're worried about war in the Middle East." I'm like, "War in the Middle East? That's almost like a common thing." I mean, it was just, oh, I know it's awful to say. And it's just, I said, the volatility in the markets are still low, relatively low. I mean, I'm anchored in looking at COVID fear. That was extremely high. And now I'm looking at the fear in the markets. Oh my goodness. I think it's maybe about 1/4 as much. So, barely, if that. So if there isn't that much fear, then I shouldn't be so worried, right? I'm going to trade what I see. And if I fear something, then all right, then maybe I want to step back or something like that, right? Mm-hmm. So for me, I certainly look, when I'm looking at options, I primarily trade ETFs, exchange traded funds, primarily associated with the S&P 500 or the NASDAQ 100, more so the NASDAQ 100 because it moves a little bit more than the S&P 500. But most wealth advisors will tell you to put, if you're looking for growth, they'll tell you to probably put it in the S&P 500 index because it is looking at, essentially the 500 companies that will move the U.S. economy, or maybe the world's economy. Some people would say that. So, and the reason why I like it is because if you're a company that's not performing well, you'll get kicked out of that index and you'll be replaced with someone that is performing well. So there's an advantage that index is going to go up in the long term. Yes, it can go down, and stocks don't just go up; they can go up and down. We all know that they can fluctuate, but over the long term, I think if you look at any 30-year window, the S&P 500 has kept its pace. I think John Stewart said it. I think he said that the only place that Americans can put their money in that can outpace inflation is the stock market, and essentially the S&P 500, right? So that was for the first part of your question. I like to look at, the probabilities are already, as we mentioned before, they're already being presented to me. So I know myself, I'm like, look, if I want, let's say I don't have shares of something, well, I want to sell puts. It's almost like I'll sell an insurance policy to someone. I'm like, look, I'll take your shares away from you if the price comes really, really, really down. I want a 25% chance of that happening. If it happens, fine, I'll take the shares. But guess what? That person has still paid me for that premium. And if it doesn't, then at least I get to keep the premium and walk away, right? A little bit richer than I was the week before. So that's my balance, right? So I look for a certain yield. So I'll say to myself, I want a 75% chance of making 1% this week. Fair? All right. So I can do that. And that's what this little program that I kind of coded. And it's amazing. I'm one of the worst coders, one of the worst programmers that I will ever meet. However, with new technologies like OpenAI, it's still in its infancy. I can just throw in some code and ask ChatGPT or whichever one you use. I happen to use OpenAI, but you can use whatever you want, I guess. It'll write the code for me. It will handhold me through the whole process. And now I have a program that I utilize for myself, and a few others have been starting to use it because they realize that the scanner is not on their platform, on their trading platform. And it helps because it tells me, I identify the risk, I identify the reward. I'm happy with that, and I'm happy with the outcome. Like a baseball or softball player who swings at a pitch that they know that that's their pitch. If they swing and miss, it's not the end of the world. And conversely, if there's a pitcher who throws a ball and that baseball or softball player hits a home run against that person, pitcher, what is that pitcher going to do? They're going to just pitch to the next batter, right? And so that's the first part of your question. And I know it was a long-winded answer, and I hope that was okay. And the second part of your question was for next generation traders. I would state that was a question, if I remember correctly, right? I forget the question else.
Right. So it's looking at balancing risk and rewards, and what advice would you give to traders of different ages?
So the ones who are older are usually retired. And so I would take a small portion of their portfolio, because if they haven't learned this, then chances are they're going to lose, and they're retired, right? So you cannot possibly tell somebody who's living, on retirement or on a fixed income to go ahead and put your money in the markets. That is the worst advice ever, right? But if somebody is wealthy enough, you can tell them, hey, listen, let me take a little portion, or you can take a little portion of that, try your hand out. And get guidance. Don't do it by yourself. And that would be for the older generation. As for the younger generation, I would say lose. I would like you to lose, and I would like you to keep losing, because you're young and you can still afford to lose. The problem is, and I'll tell you this, the problem is when you win too much and you're young, you think you can sustain them. You don't learn from your wins. You don't. You learn from your losses. I'll give you an example. When all of us were younger, and one of my dearest friends, he says he's a big advocate of getting married when you're young. He's like, the younger the better. And I said, well, maybe there's a balanced age. For me, I say, if you should look at it when you're maybe a senior in college, and you should start thinking about it, because, you're still on the cusp of growing, but you're done with college, right? Or you're nearing that, and you're moving on. And he told me, he said, Yasir, would you get married now at 50? And I just said, no, because, there's nothing really left for me to learn about relationships at 50, right? There was heartache, right? At least for me, there was notes being passed in high school between me and someone else, right? I think I still have the notes in my parents' attic, from when I was a high school kid, and there were losses, but I learned from those to find, let's say, the person that I wanted to be with and start a family with. So if I didn't experience those losses and those pains when I was younger, I wouldn't have recognized how valuable my spouse is, right? But but if you ask me at my age now, I'm not saying you can't get married at 50. No, that's absolutely false. But for me, I would have a completely different set of standards to look at when I'm 50 as opposed to when I was 21, 22. And I think that for the younger generation who wants to trade only what you can afford to lose. Do not trade with a margin account. And I think I'll leave your younger users or your younger listeners with this, because I had one student of mine. He did ask me. He went to me. He said, Dr. Samra, I'd like to trade forex, foreign currencies. And I said, okay. And he said, I heard that I can open an account with, $250 and I can make a lot of money. I told him, I said, yeah, that is technically true, but you're probably going to lose that $250, get a margin call, and you're going to have to put up the rest in order to stay in the position. And I said, you're not going to ever want a margin call when you're in your 20s. You are probably going to, I don't know. I was very clean with them. I said, you're probably going to wet your pants. And I left it at that. And they said, really? I said, yeah, getting a margin call when you're young can decimate you, can decimate your life, your financial wealth. And that's why I tell the younger generation, if you have a little bit, only put in what you can afford to lose, because I can almost guarantee you will lose, but that's the only way you're going to learn. And I still lose till today, but it's like you mentioned earlier, I take the emotions out of it. If I strike out and I'm a professional baseball player or a softball player, I'm just going to wait for my next at bat, my next attempt, and then I'll be successful. If I'm not successful that time, I know eventually I'll be successful because I have enough experience and enough knowledge where I know I can call upon that knowledge and wisdom to execute my decision and not have to worry. You just don't have that when you're younger, only because you just haven't experienced as much, right? You and I are talking about 50 years of experience on this earth. Somebody who's half that age, I doubt would have had as much experience. That's all. It has nothing to do with somebody who can't do it. It's very rare to meet somebody who's 25 who's experienced life as much as a 50-year-old. That's really it. And that's why I tell the younger generation to get ready for losses and to accept those losses so that when the wins come, you'll savor those wins and you'll be like, yeah, I've arrived and now I know what I'm doing. Hopefully that helps.
Absolutely. Thank you so much, Dr. Summer. This was such an engaging, insightful conversations for a listener. We delve into what are those cross-generational learnings from each other. We walk through the technology revolution in options trading from the traditional trading floors to now today we're using data and AI to help us to better manage how we're doing our trades, the options flow visual, giving us better options flow visualization. And then we dovetail into removing the emotions out of our trades and look at both the wins and the losses as data points. To our listeners, thank you so much for tuning in the FlowRy Show, where we share our stories, which creates a bridge between generations, as Dr. Samra created this bridge across options trading for us across the different generations. Let's embrace the power of how we build meaningful relationships and create a more connected world. Until next time, thanks for joining and listening on the FlowRy Show. We'll continue to cherish the moments as we continue to learn, grow, and inspire. Dr. Samra, thank you so much for joining us today.
Absolutely my pleasure. And I'd be happy to come on again.